Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to quick market wrap-up, where we understand the market through the charts and then try to plan for a better trade for the upcoming day. That's Thursday, tomorrow, March 7th, 2024. So we had a breakout day, a new all-time high on Nifty, and the banks have started performing now. It has taken out a very major resistance gap, and the bears in the indices got trapped. We have a new all-time market wrap-up here, except for the Fyers institution data that has not come in. The rest of the information is there here. So, but we would basically look at the technical charts before we come back to that. So let's see what does this chart say. This is the Nifty charts that you see here, and the plain charts. Look at this. It's a bullish candle, absolutely. It has completely engulfed the previous two, which increases the bullishness. It's a bear trap because it went below the last candle's low and then moved much above the previous candle's high. Absolute bear trap, bullish, engulfing, which makes it even more stronger. Banknifty, no doubt it's a wide range bullish candle breaking out. So I think Banknifty was trending all the day from the beginning. 5 minute charts that you're seeing, it gave up some of the last 1 hour. It's in a Banknifty expiry today, so probably because of that play, it gave up some of the benefits of probably 200 points or something. It might have given up in the last 1 hour or so, but otherwise it was trending from the beginning. But look at Nifty, that's where the trap was there. Nifty did take a dip of 0.6% or something, 0.5% or more dip, and then made double of that and then broke out finally during the second half. So that was a trap there. So it was the start of the day was Banknifty, which performed from day begin to end, and in fact it might have lifted the Nifty also to the new all-time high zones in the later day. But if you see the position of the price, you can see that it's an all-time high obviously, but now it's heading towards the top of the channel, which can extend to 800 or so, to the top of the trendline channel that we're talking about. Right, so it's well above the 20 exponential moving averages. Right, it's a breakout that's clearly can be seen there. Right, it's a consolidation, some pause after breaking out of that, and then a solid candle above that box. So it's consolidation, breakout, and that continues. You could also see this as a flag. If there is a line, this candle that was on Friday, last Friday, if the candle is pulled and the flag breakout. And look at that also. Banknifty, it was struggling. It had made a deeper cut and it was struggling. It broke out of this channel. W pattern, it is breaking out in the blue channel after having dipped twice with the yellow channel below, and now it is heading towards the top of the blue channel. It has taken out a gap resistance that is there here at 48,000. It gave up some of the benefits and managed to close only below the 58k. That's fine, but it's profit booking. That's very, very close to the all-time high now. That's what it is heading towards for sure. Right. So let's look at the support resistance levels also. So it's all-time highs on the Nifty, and the next level to take out is 22,500, which is all-time high plus big rounding number. After that, it can have resistance at 22,600, 22,700, 22,800. 800 could be the place where people may have resistance because it's the top of a trend line channel. Banknifty. Now, we didn't talk about these supports. The first support would obviously come in at 22,400, then 22,300 because it's a place where the breakout happened. Then it will come to 22,100, then rounding number 22,000, then you have 21,737. That's how the supports are then outside. After that, you have 21,630, which is the 23 Fibonacci retracement level. Now, Banknifty, the resistance above would be to take out the 48,000, which it already taken out, but that would be first rounding number resistance immediately. Then 48,500 rounding number resistance, then 48,636 is all-time high resistance. And after that, it can go as high as 49,500. So every hundreds, big resistance is on the way. For Banknifty, it may not be hundreds. If it is after the all-time high, it may be flying. Now there is no hurdles except the all-time high. Right? So if that is clear, then it can fly like anything. It can move very fast, not like it was doing all this time. So yeah, so that's it. The downside for Banknifty, the first support would come at 47,100. That is where the Fibonacci 23.6 retracement level is there. Then the 20 exponential moving average support will come. That is at 46,728. Then before that, 47,000 is a rounding number, so that can have a resistance. So then 47,000 is gone, means 46,728. Then 46,432, which is 50 exponential moving average, and then 45,946. Which is 100 exponential moving average, and then 45,000 nearby. That's where the 200 exponential moving average is there. Plenty of supports, and then only fewer resistances now that the gap is taken out. So that is what the resistance support level just quickly wrapped up. So we have a positive day after two days of indecision of the Nifty. Finally, Nifty has broken out and made new all-time highs about 22,450. So it's a 0.5% more gain, 118 points up in the bullish engulfing. Remember, the Nifty rally has now extended to 34%. The previous leg itself is 20% rally. Right? Or monthly, ignore that. Banknifty is it's trending up. It did perform well as compared to the index. Yesterday also it performed well. Just from the wide range candle. It's bullish in nature. Nearly 1%. 384 points up, and it is in an attempt to recover from the 8.5% of retracement that it had done, and it has managed to close just below the 48,000, and it is much above the 20 exponential moving average. Remember, the rallies for Banknifty had been only 26% rally, so got a way to go up. Intraday, as I said, it was contrary initially. It was a dip and a breakout, a reversal from the Nifty. And it was trending up, and then some profit booking in the case of Banknifty. Fyers were buyers yesterday, 574. They were small buyers. They are mainly sellers since several months now. Several weeks actually, right? Probably a month also, more than a month also. Domestic institutions were also buyers. They had always been buyers since long, and it's mutual fund money that is actually flowing in. 1,834 crores of money came in yesterday in the cash market. Today's data has not come in yet. We'll check it. It does not come in yet. So most likely it would be a similar pattern of what has happened yesterday. Both the institutions might have bought. That's what we'll assume, because it is across the sector green and across the sector heavyweight buying that will happen. The resistance and support zones we've already seen. I'm not repeating that. The momentum maintains the bullishness. It's bullish on both indices, Nifty and the Banknifty, on the daily time frames, and it's rising up trend. And trend indicator really is also showing that the trend is in the bull zones now, crossed over and with having rising strength. India weeks is close flattish. Although it did dip, but it only just 0.5%. It's 14.29. So India weeks, don't expect that to cool off now that the election is coming. That fear factor will always be there. So you have to be cautious in that factor. It's on the edge of the low volatility and the medium volatility. So it's actually outside, very close to the 50. But because it is rising above the 50, it will be very volatile. As it approaches to the election, that's what will be happening. The Bollinger Bands are expanding. It was expanding yesterday also. It's expanding on the upside, indicates more up move, potential up move. That's what daily charts of Bollinger Bands on the Nifty and the Bank is indicating both, expanding on the upside. So technically, charts are maintaining the momentum of the trend it had gained yesterday. It has further strengthened that today, and Banknifty has turned out to be much stronger. W patterns seems to be breaking on both indices. The higher low high pattern is emerging out in Banknifty. The 20 exponential moving average, it is conquered that comfortably and breaking out now. Taken out the gap resistance also. It's just 500 points from the all-time high. So Banknifty has shown better strength today and yesterday as well, and that is what was required for the Nifty, and that is the reason Nifty might have paused for 2 days, and then now it can do the breakout. So yeah, further moves up move is what the charts are saying, but you have to be cautious. Market is heated up. It's approaching the 23. Another 500 points, you're at 23,000. Can you imagine that? Right? From December 20,000, it just shot up 3,000 points. Just a matter of few months, less than 3 months. So that's the kind of move we're talking about. So it's heated up, so you have to be cautious about the fact. At the same time, it may be a pre-election rally, which can go for the high as well. So across the sectors indices, if you see, they're all close green today, except for the metal and the reality was slight reddish, as you see. Daily charts are showing that the auto, pharma, reality, metal, they are all showing short-term bullishness, and it's the FMCG reality that is maintaining the sideways and trying to move up to the bull zone so far as about 60. Heavyweight stocks have done well. It has done badly the last couple of days, and it is green today. Reliance and the ICICI Bank are those two stocks that's maintaining the bullish momentum. All other stocks, right, the product banks and whatever, ITC and InfiTCs, all these things have climbed back and it's maintaining the sideways momentum. So none of them are in the bear zones. Even ITC and HDFC Bank have climbed to the sideways, I'm saying, after having fallen down yesterday and day firstly. US, another trouble here is the US index are showing red. It's a 1% fall nearby that's showing on the charts of Dow Jones, Nasdaq, and S&P 500 and all this. Remember, the US markets are rallying just like ours. It is at the all-time high. It's maybe consolidating. Then it may do some retracement anytime. All this can be expected, and in some other markets or other markets will reflect when all that happens. So you have to be cautious, careful. Our market also has done only 4.5% of correction, Nifty especially. So the dollar has shown a flat 103.6 red right now. Rupee is also flat red, but maintains the 83 levels, centrally managed by central banks basically. Crude is shooting up and some flat green, some cool-overs happen, but it's below the 80, 78.8. Gold is where the trouble is foreseen. The markets are at the very top. US markets showing some retracement beginning, and dollar is shooting up. Gold is shooting up to all-time highs, right? Since last several, it's breaking out. It's very, very close to the all-time high. So that's the reason for us to keep a close watch on as to why it will be doing this when markets are at all-time high. You have to keep a close watch because it's a hedging instrument. More hedging is happening. People are feeling that more safer haven is gold than the equity. So keep a watch on that. Market is heated up. That's what it wants us. Now we had dips initially. We didn't have a dip today, but so every dip is an investing opportunity, and breakouts are places where tight stop loss momentum investing strategies can also be applied on stocks and indices. Now for the non-directional players, the IV percentile, the IV to RV spread, all in favor of option sellers. And for directional option buyers, the momentum is clear now, direction is clear more or less, so apply the strategies accordingly. Or option spreads, combination of buy and sell also can be attempted. Check out the playlist for the option strategies and all those in the YouTube playlist, and you can see that. Now, tomorrow is a weekly expiry, the first weekly expiry for March, and it's a range that's very 1,000 points wide that the option writers are saying a day before. 22,000 is where the highest put writing is in, and 23,000 is where the higher call writing is, and we are in the midway at 22,500. Close to that. We're in the midway, and anything could happen. It can form at 500 points down, it can break out, but 500 points. So more probability, nobody knows. But that's why the option sellers are better with a not so wide range. But the put call ratio is heated up 1.3, extreme bullish. Long build is what you see in the futures or of Nifty as well. So absolute bullishness is what you see. Keep a note of this range for the option game tomorrow on the weekly expiry day. Yeah, so that's all I have. So if you have not subscribed, you can subscribe and share to friends and colleagues. Also, you can subscribe to the Twitter, the X, where regular technical posts during the intraday is placed. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.